Good morning, everyone. Greg here with MasterTrader. Futures are up here a little bit here, about 4 points, the S&Ps, and looking to push up above these highs here. And looking at the weekly chart, we're beginning to get what potentially would be a red bar ignored right here, last week's red bar, which suggested possibly a little pullback there. Now, it is only the start of the week, so we'll see where this ends, but this pattern of a consolidation near a prior topping tail and then this red bar being ignored suggests that prices should move higher. So we'll see how that plays out. And you can see where they are here pre-market. They're pushing up and a little pullback and rounding bottom after an initial pull. So bullish price action, and all suggesting that they can push higher. Qs here just continue to move up. Extended gets more extended, and at some point that will change and the pullback will start. It's just not happening now. Oil, nice bounce off of the low, and now it's coming into this resistance area. And give me 1 second here. This resistance area right here where you have multiple moving averages clustered together. We got the 20, the 200, and the 50. And while moving averages can be a subjective reference point, meaning they're just lines on the chart, not real support or resistance, in this case, they're all lined up with this congestion area right there. And that's the proper way to use moving averages as a reference. Now, certain moving averages like the ones that I'm showing you that are so widely followed, you'll have institutions and other traders using them as a focal point. So especially on a daily chart, I feel those are the ones worth to use, especially on indices and commodities like this, because as I said, this is what most will follow as a reference point. And in this case, you do have them lined up with a large congestion area, so it makes sense that oil would stall in this area here. It'll be interesting to see if it could actually get above that, but time will tell. Bonds. So we got the markets up here a little bit, and I've mentioned in the past, the inverse relationship, and you got the bounce off of here. So just based on that inverse relationship, if it's going to follow through, this bounce up in bonds should be about stalled, and we'd see them pull back here a bit while the markets go higher. However, should they move up, what looks like a market that's going to go higher may get derailed. So I keep an eye on that. And if you don't have bonds, use TLT, which is the ETF for them, and just see or set alerts, there and there, and see, or even on a most immediate level right under yesterday's low. See if that follows through. Retail keeps getting killed. Here is Dick's Sporting Goods, which is down here about 5.5 points, and it's gapping down, 41.95 as you can see, down here, and it looks like it's got pretty much an open space here to drop, and just a little support there, but with a gap like this, and it kind of like gapped down the other day, not kind of, it did, and then kind of just sat there near that low. So I'll be looking at this as a possible short gap play this morning. Keep an eye on that first thing. And there were some others here. We had let's see, I think it was Target. Target's down a little bit, not much there. And Macy's is trading here, actually up a little bit, but that's already been killed. So yes, we got TJX. That one's getting down big time as well. So that could be, let's see, 72-ish. Yeah, I like that. And possible gap, short gap play there. And JCPenney, which has been down a lot, stabilizing a little bit. So retailing continue to be decimated, and the gorilla in the room continues to be Amazon. While it's stalled here, it just looks like 1,000 is in its sights to move up to that. And if it just runs toward that, if it had a up move into that area, that could be a short-term top. I would keep that in mind. And if you're watching FDN, the Internet Fund ETF, that consolidated after getting extended. There was a topping tail right there, and buyers stepped up last Thursday and a dip, and now we're above the highs, and it's holding up here. So markets look poised to move higher. Then look at the Dow, but that's up 45 points here, but not above that resistance there, but knocking on the door. And you got a similar pattern there on the weekly chart. So we'll see if these markets can move higher, and if they do, these market internals, which I've showed you in the past, could line up, whereas the sentiment is close to coming into a bearish area. And if the markets were to now push higher, which could possibly be a blow-off run or turn into a climactic run, especially on the NASDAQ, we could get breath finally into a bearish overbought area. And with the two of them aligned, which is what we need for a signal, historically we would have a signal of a short-term correction at hand, and that doesn't come in a day, or sometimes it may come 2 days later or a week later, whatever it is. But we then have these two in alignment, which hasn't happened in quite some time. And when it does, we'll certainly talk about that. Have a great trading day, and we will update tomorrow.